afternoon, and welcome to the first Lean In sort of virtual series that we're going to have throughout May. So sort of it's a lunch and learn series, and sort of using our various networks to sort of try and help people with all the different aspects to this sort of new life that we're all getting accustomed to. So we thought we would start off with sort of coping with COVID. And we're joined by Dorcas Crawford, who many of you will know from Edwards & Co, and she will be sort of running us through the very practical side of things in relation to the job retention scheme and furloughing of staff. And obviously our friends at Dankse Bank, we have Geoff Sharpe, who is the head of corporate banking there, who will be giving us some practical tips for those businesses who will be maybe approaching banks and funders over the next coming weeks and months. And then I myself will be picking up on the tax side of things to see if there's any sort of maybe some handy tips and hints that you can use in relation to your tax that can give you some cash flow savings. So I'll not keep you very long. That was a nice and short and sweet introduction, and I'll pass over to Dorcas, who will be leading starting us off this afternoon.
Hi. Can everybody hear? Yeah, all good. Okay, hi everybody. My name's Dorcas Crawford, as Lorraine said, and I've met many of you through Lean In or through Belfast or through my work in Edwards & Company, or the mediation work that I do for the Better Way, the conflict management service that I run through Edwards & Company as well. So today I've got my lawyer's jacket on for the first time in 7 weeks, I think, just to make me feel like a lawyer again. So thanks everybody for coming. I'm going to spend the next 10 minutes doing a very broad overview of the coronavirus government retention scheme. So if we can just look at the definition quickly. Gail or Lorraine, can we just move to the slide on the UK government coronavirus job retention scheme? So probably some of you will have heard of it. There will be a range of knowledge, I think, about this, but just the basics of it in the next 10 minutes or so. So that's the definition on the screen as you see it at the minute. It's officially called the job retention scheme, although it's become known as the furlough scheme, and furlough being another one of those COVID-19 words that none of us ever used before the middle of March this year, and suddenly has become a daily word or a weekly, hourly word on our lips, the word furlough. Actually, funny enough, I had heard of the word furlough because when I was a child, my parents' best friends were missionaries in India. And when they used to come home in July and August, when my brother and me would get really excited about exotic little souvenirs they brought home for us, we knew that they were coming home because they were on furlough. So interesting fact. It was used in previous times, but now it's become very specifically the word of the moment in the COVID-19 crisis. So basically what it is a means of retaining employees in your workforce because your operations have been severely affected by coronavirus, meaning that you wouldn't have work for them otherwise. And I'll go through those definitions in a moment in more detail. I personally have to say it probably, for me, running a small business was one of the greatest, most relieving moments of this entire crisis. So when it was announced by the government, the Chancellor announced it on the 20th of March. And I have to say on the 21st of March, I think when I analysed it, was probably the first full night's sleep I had in about 10 days because I have almost 30 employees and my anxiety levels about how to manage them through this, how we were going to keep paying them, etc., because those are all people who have mortgages to pay, who have families to look after, etc. So when the announcement was made, I realised very, very quickly, and you'll see that as we go through it and the benefits of the scheme, that it was going to have a big benefit for a small business like ours in Edwards & Company. So personally, very grateful to the Chancellor at that point in time. So what is it? That's the main definition, but if we can break it down, then let's have a look at the details. So what's really important to get to understand the scheme, and it's fairly simple, is that the purpose of it is to enable employers to retain their employees where otherwise they might have to consider redundancy. And that's what it's limited to. So the idea is that you won't have to pay people off. The idea is that there won't be hundreds, thousands, millions of redundancies over the next few months, and that would then cost even more to the economy. Well, we'll come to the figures shortly, and it may not cost more, but the purpose of it was to allow you not to lay people off, not to make them redundant, etc. You might also remember in the news the few days before this was announced that lots of the pubs and restaurants in Belfast had already had to lay huge numbers of people off, and then were able to re-employ them and take advantage of this scheme instead. So what that means to enable employers to retain employees where otherwise they might have to consider redundancy. When you think about redundancy, it's because there's no work. That's as simple. There's no work for the person to do. So for me, in Edwards and Company, for example, we very quickly went into lockdown mode, and all of our solicitors and our some of our management people we knew would be able to work remotely. We got them geared up in the few weeks before, and we got them ready to do it. And they were all able to do that very quickly. But very quickly, we realised that most of our admin staff were not in a position to work from home, either because it was impossible to get them set up, or because the kind of work they do is really quite physical work. Even though many of us are paperless in the world at the minute, not solicitors, still a lot of us rely on paper. So a lot of our admin assistants would make briefs for barristers, would prepare papers for court, would be on the phone arranging medical appointments for clients, etc., etc. So their work very quickly became redundant effectively. We didn't have work for them to do. So that's the typical example of when you would be able to use it. The whole purpose is to allow you to keep those people employed who I would otherwise have had to say, I'm sorry, I have no work for you to do. And there's no other purpose other than that. It must be for that purpose. It was open to all organisations throughout the UK with employees on the payroll. They had to be on the payroll on the 28th of February. So the payroll being your HMRC payroll. And if you had employees on that, then it's open to you. And currently, this scheme is going to run now until the end of June. Initially, it started for until the end of May, and then it was extended a few weeks ago to the end of June. Bang up to date on the news, about 10 minutes before we came on this webinar, the Chancellor has said that he is going to have to look at how he might run it down after that date. So he's now extended it to the end of June. But if I tell you that a quarter of UK workers currently are on the furlough scheme, and the government is paying 80% of their salary, which we'll come to in a minute, then you'll understand that the costs of this is probably one of the biggest costs of the whole of the pandemic crisis. They've calculated, I think, that 3 months of it will cost the economy something like 42 billion. So it's a massive amount of money. Unfortunately, I think one of the ministers rather crassly said yesterday or this morning something about how you would have to do something about it because people could become addicted to it. Really inappropriate thing to say. It's a lifeline for most businesses. It's a lifeline for most people. So in a typically stupid way, some minister come up with that line, but not a good line. But what you can understand is how money will run out. So what the Chancellor has talked about this morning is maybe running it down rather than 80%, it might go to 60% once businesses can get up and running again. But essentially at the minute, and we'll move on to the next slide, which is the sort of mechanics of it and how it all works. So where that big cost has come from of 42 billion is because the government is paying effectively through this scheme 80% of the salaries of over 6 million UK workers at the minute. So it doesn't take long to add it up. So this is what it pays, 80% by the government to the employer, up to the maximum of £2,500 per month. That's gross. The employer is still responsible for paying tax, etc., but you can claim national insurance as well. Those are details that are just too much detail for me to go into right now, but they're all very easily understandable from the government website, gov.uk job retention scheme. And we'll send a link, I think, at the end for that. But 80% is paid by the government to the employer. So essentially what happens in practice is that, so for March, it could be backdated to the 1st of March, all of our staff in Edwards and Company who went in furlough went on the 23rd of March, and from then on we are able to claim back 80% of what we've paid to them up to this maximum. So we paid as normal, we had to pay their salaries as normal, and then we claim it back. And it's a grant, it's not a loan, it's a grant paid by the government to the employer. So we had great success with it. I think it was a tricky day for my two finance managers who went online that day and uploaded. I think we have 11 employees in furlough. They spent the entire day uploading it. They said it was tricky enough, but they got there, and within 7 days the amount that we claimed back, the 80% of those salaries, was paid into our account. So it's a really good, efficient well-run scheme. Not often I say much good about the Tory government, but I have to give them this, and the Chancellor has become a bit of a hero to me and probably others in small businesses for this alone. So important to know also that the minimum period of furlough is 3 weeks. You can't do it for any longer than that. You can't do it for any shorter period than that. You can do it for longer, but not shorter. So you can't, for example, people would say, oh, can I put somebody on a 3-day week and claim the other 2 days on furlough? No, the answer is no, because if you keep going back to that basic definition, it's on the basis that you don't have any work for them to do, any work at all. So the minimum period is 3 weeks. What you can do though is take somebody off furlough then for a period of maybe 2-3 weeks or longer, and then put them back on again. But during those 3 weeks, the next point is they cannot undertake any work at all for or on behalf of your organisation. So that apart from really very, very limited things like passing on an urgent email, for example, that they knew nobody else would get if that happened, they cannot do work on behalf of the organisation. They cannot bring in any revenue for the organisation. And to do so is actually fraudulent. It is criminal and it's unlawful and it is fraudulent. And my understanding is that the HMRC will have no hesitation in finding out and taking that money back from the employer. And it's the employer who has responsibility for that. The government, the HMRC will not come after an employee. If an employer has claimed unlawfully, the employer will have to pay it back. So it's as simple as this. To have somebody working when you have declared them to be on furlough and claim money for them is unlawful, it's fraudulent. Do not do it under any circumstances whatsoever. What we've been able to do with one person in particular is to put them on furlough for 3 weeks and then switch them with another person. Not ideal because you have to keep making the application, but it is possible to do that if you need to spread the load a bit. But they must not do any work during those 3 weeks. It's really important to remember that. And the employment law and contract terms still apply. So it's really important that people are still protected by ordinary employment law. Just because they're on furlough doesn't mean that they have no rights. They basically still are entitled to all the protections about working time regulations, sex discrimination, religious discrimination, etc., protection for maternity leave, all of those kind of things. So don't forget that those still apply as well. And just one last thing in relation to the 80%, the employer can make up the extra 20%. In our case, we're fortunate enough to be able to do that and pay our employees full pay, but you don't have to. There is no obligation at all to do that. A lot of employers are doing it if they can, but the 80% only will be paid by government. The rest is up to you. So very quick whiz through. I think that's probably enough from me, and I'll leave anything more to Q&As, but I think I see on the chat the link has just been put up for the government link, and it's really helpful and the information there is really good.
Thank you so much, Dorcas. That was really useful, and I'm sure a lot of our audience will be able to use those tips and maybe come back and touch if there's any queries. Next we have up is Geoff Sharpe, who's Head of Corporate Banking at Dankse Bank, and he's going to sort of give you a bit of an overview from a lender's perspective. Dorcas has mentioned about the job retention scheme, and obviously there's a lot more supports, especially around sort of funding that the government are providing as well, and Geoff will sort of bring us through those now.
Thanks, Lorraine, and thanks, Dorcas, as well. That was really, really good. So look, what I want to cover just today really is 3 or 4 key areas that I hope will provide some practical advice and guidance to any businesses out there who are considering seeking support under any of the government's loan schemes. So look, I suppose what I might do is just kick off with a very high-level overview of the 3 schemes that are now available to businesses, and I suppose the key differences between each. So the difference, I suppose the key difference between what Dorcas has outlined in terms of the job retention scheme is that is a grant scheme, whereas the three schemes that the government have launched to support business in terms of the loan schemes are that they are loans. So there will have been a number of acronyms that people will have heard referred to in the press and the news and so forth. But at a very high level, there are 3 schemes, and the most recent was launched on Monday, and that is the B-Bills scheme. So that is the bounce back scheme. And the bounce back scheme is for any business that has a requirement of a loan between effectively 0 or 1,000 and 50,000. So it's really aimed at the low end or smaller end of the market, the SME market, in terms of funding requirement. And the B-Bills scheme is effectively a self-certification scheme. It's designed to be quick and easy and effective and to deliver money to businesses quickly. So it is effectively self-certified by a business through an online platform. And I have to say, since we launched it on Monday, it has been pretty busy in terms of applications through the bank. The CBILS scheme then is the Coronavirus Business Interruption Loan Scheme, which is for any business with a funding requirement between £50,000 and £5 million. And then the CLBILS scheme, which is the Coronavirus Large Business Interruption Scheme, is for any business with a turnover greater than 45 million. That has a requirement. I should have noted that the CBILS scheme has a cap at a turnover level of 45 million. And then the large business interruption scheme is for any business with turnover greater than 45 million. So there are 3 schemes available to businesses, and primarily dependent upon their funding need, that will determine which scheme they apply to. So in terms of some practical advice and guidance, I thought it would be useful to share what information the bank will typically ask for from a borrower. So I suppose from ourselves in Danske Bank, we designed a fairly straightforward list of information requirements right at the outset of the COVID pandemic. And it was designed to be easy, straightforward, and with the ability for businesses to provide the information to the bank in a straightforward way. What I should say is that under the B-Bills scheme, which is the 0 to 50,000 scheme, there's no requirement for the borrower to provide anything by way of information to the bank. The borrower self-certifies and provides all information through the online portal. It's a 2-page application form that gets submitted to the bank, and the bank or the lender will then automate its credit decision and provide the funding to the borrower. So the B-Bills scheme is extremely straightforward and with limited requirement or no requirement for the borrower to provide any information outside of that required within the portal. Under the CBILS scheme, which is then the requirement between 50,000 and 5 million, there is a typical pack of information that the bank will look for. And at a very high level, what we are asking customers for is a high level assessment of the impact of COVID on the business. So what has been the supply-led impact, demand-led impact, and any staffing impacts? What are the debt servicing obligations of the business that it has to meet over the next 3 to 6 month period? What is the position of any other lenders? So if the business has, let's say, for example, third-party asset finance lenders or invoice finance lenders, I suppose we're asking for an overall picture of the position with other lenders. And then we're asking for any detail on trade credit arrangements. So if credit terms have been renegotiated with key creditors, and also with any statutory creditors, so that arrangements with the HMRC are up to date and so forth. And then some detail just around what the impact will be on the business in terms of cash flow over the next three to six months. I think the key point there is that the level of information request is absolutely relative to the size and complexity of the business. So in a number of cases where we have provided CBILS support to customers, that information has been provided by way of a conversation with a customer on the phone, or by email, or a simple one-pager. And then obviously for some larger corporate businesses, there may well be a higher level of information. But look, your lender will keep you right and guide you in terms of any information requirement. So that covers really at a very high level the type of information that the bank is asking for from a borrower. And really, look, key message that I would share and leave with you is that information requirement, as I said, is really relative on the size of the business. So for small business, micro business, owner managed and SMEs, that requirement is really limited to perhaps a conversation with your lender, or look, a very high level email or one-page document. In terms of a few key tips then that I would share, I suppose, based on our experience to date over the last 3 to 4 weeks. The first key tip I would say to focus on for any business owner is focus on the cash position of the business. So that is the critical and important part of the assessment for what loan is required. So if your business has been typically generating X pounds of revenue on a monthly or a quarterly basis and has X pounds of cost to cover, then focus on those numbers over the next 3 to 6 months. What do you reasonably expect those numbers to be? And then we will base the funding or the debt requirement or loan requirement under the CBIL scheme on that number. I mean, the typical pack of information that a bank would normally look for in terms of P&Ls and balance sheets, we're extremely sympathetic to the position of businesses at the minute. We're not asking for that level of information. So tip number 1 would be focus on the cash. Tip number 2 I've mentioned is really the depth of information we require is reflective of the size of the business. So please do not be afraid or wary of a large pack of information requirement. As I said, under the BBIL scheme, it's an online application, and under CBILs, we're asking for that information on a lot of occasions in a conversation with a customer. Third key tip would be keep in contact with your lender. So you might not have a requirement for a loan today, but there may be a requirement in 1, 2, 3, 6 months. So keep in touch with your lender and with your bank, whether it's on a weekly or quarterly basis. Keep them up to date with how things are progressing, and it means then that your lender can react quickly and promptly to any requirement. And then the final tip from me would be, look, if you're thinking, if you're sitting thinking today, not sure what the best approach is, not sure what the best scheme is, speak to us, speak to your bank. We are taking a position in Danske as being advisors at the current time. So, there's no doubt that, we're talking to a lot of customers. We're providing solutions to a lot of customers. So whatever the situation with your business might be, there's a high degree of likelihood that we will have addressed that same problem with another business. So certainly speak to us. Next point, just I suppose I thought it would be useful to address is just really what do we mean by viability? So there's been a lot of talk in the press around the CBIL scheme and some of the criteria, meaning that a business has to be viable, and we get asked a lot, what does that mean? So very, very simply, what it means and how we're approaching that in Danske is if the business was viable pre-COVID, and if it had a profitability and a revenue which under normal circumstances the bank would comfortably lend to, then irrespective of the impact of COVID, we will continue to treat that business as viable. So don't be concerned about the cash and the performance over the last 3 or 4 weeks, because clearly a lot of businesses have been significantly impacted. So the viability test and the viability check is based on the performance of the business pre-COVID. So that is how we and most accredited lenders will assess a business for viability. And then just I thought I would close by highlighting some of the ways in which we've supported some Danske Bank customers to date. And I think important point to note really is that, the CBIL schemes are one form of support, and they've really got off the ground. There's a lot of traction with CBILs, and we've now provided over 70 million of CBIL support to businesses in Northern Ireland. But there are other solutions as well. We're providing lots of asset finance repayment holidays, lots of loan repayment holidays to many businesses. So in fact, our total support is over 130 million. And I mean, really it depends on what best suits the business. So for many businesses, they may not want to take on additional debt through the CBIL scheme, and they may prefer to take a repayment holiday on asset finance or existing loans. So again, I think the message from us is there is a solution in place for most businesses that we will try to fit and structure. And then on the personal side as well, on the personal side, retail side of the bank, we've provided over 4,000 mortgage repayment holidays and over 450 personal loan repayment holidays. So again, it just highlights the extent of support available through both ourselves and most accredited lenders. So hopefully, I know that's a very sort of high level overview. There's lots of information on the British Business Bank website around the various schemes and viability and terms under each. If you do have any questions and queries, I'm happy to take those away and pick those up afterwards. I think Lorraine will share contact details at the end. But like, hopefully that provides a high-level overview of some of the support available and some practical guidance if you are thinking about approaching your lender. Okay, thanks, Lorraine.
That's great, Geoff. Thank you so much. Lots of people thanking you for the clear tips there, Geoff, on chat as well. Just a reminder, everyone, that we do have the chat function, and we will be taking a quick Q&A at the end. So if you do have any questions, you want to maybe filter them in now in case you don't want to ask them in person over the Zoom account. So a lot of you already know me. So I'm co-chairing Lean In this year with the Belfast chapter. In my day job, I'm a head of international tax with Grant Thornton, and over the last sort of couple of weeks, we've been working a lot with clients and different businesses on how they can maybe use tax to help assist their cash flow. So I thought it might be apt to give you a few maybe quick overview, run through those tips for yourselves. So I suppose we'll start off with indirect tax. So it's mostly your VAT. And so it's been widely known that there's a VAT deferral scheme that the government have brought out, which allows you to defer your VAT for this sort of quarter. One thing you need to make sure is that you actually stop your direct debit, because otherwise HMRC will lift that money when you submit your VAT return. So look, some clients we have been working with, if you are maybe an exporter, or maybe you sell goods that do not have VAT on them, you can maybe switch to a monthly VAT return. So it means that you're getting your repayments in every month instead of having to wait each quarter to get that money in. Another thing that maybe people aren't too aware of is the VAT bad debt relief. So if you have a customer and you've paid the VAT across to HMRC in respect of that sale, but they actually haven't paid you, you can actually make a claim and put that through as a bad debt to really get that VAT returned and offset against your next VAT return. There's also some clients that we're working with, or maybe actually in discussions with their suppliers and also their customers, where there's maybe been a mutual agreement where they'll just pay invoices net of the VAT, and then sort out the VAT in the coming months whenever cash flow is better. Also, the other thing is, I know there's sort of the Brexit word is sort of looming in the background, but as of now, we can also make EU VAT refund claims. So majority of the times, this is sort of things that, people would maybe, if they're in the south buying products or mostly diesel, you can put a claim in for those. So you can claim for a 3-month period. So it would be worthwhile having a look to see if you can collate a claim for January, February, March, and get some cash in to the business that way. Another thing some other people can look at, if you've got a turnover less than 1.35 million, you can actually apply just online. Sorry, you don't need to apply, you just can apply to make cash account in your way of calculating your VAT each quarter or each month. So that means you only have to pay over VAT that you've actually received in from customers. So that's sometimes quite useful, especially if maybe some of your customers are slow in paying you at the moment. For corporation tax, for any of those of you that have companies, it's maybe worthwhile is maybe having a look to see if your R&D and capital allowances refunds, if it's something that you're maybe working on at the moment or have looked at in the past, it's maybe worthwhile getting those finalised and getting those submitted to HMRC to allow that refund to come back in to the business. Some other businesses are also considering changing the company year end, so that can work both ways. So maybe if you're undertaking lots of R&D and capital allowances, maybe shorten that year end so you can make that claim quicker and allow that cash to flow back into the business sooner rather than later. And also, if you have maybe incurring losses over this period, it's maybe once we're out of this time, it's maybe having a look to see if you have losses, is it maybe to extend year end to gather those losses into maybe the profitable times just before, and that will also maybe help your reduce your corporation tax bill as well. For any larger businesses who pay their sort of corporation tax by quarterly instalments, you can also reduce those amounts because they're based on what you assume your profits will be for that period, and there's no late payment penalties or anything, and the late payment interest rate is just 1.1% per annum. So some people are actually looking at that. It's quite a useful low way to sort of finance. And I suppose just another point to make is sort of just making sure that if you maybe have any companies that are overseas, just how you're getting the cash back out from those companies as well. And then in relation to your employees, so I know Dorcas has went through the great job retention scheme that's available. So just some other things is that companies we're working with are looking at is sort of different share option schemes that can be very beneficial for motivating your staff, and it's also a good way of reimbursing them and providing them with bonuses without using too much cash. And obviously a lot of people are now working from home, so if you have staff working from home, you can actually pay them a tax-free allowance. So for those weeks up until the 6th of April, it was £4 per week, and then currently it's now £6 per week. So that's tax-free, and it means it's a deduction for you as an employer, and the employee can receive that without having to pay any tax on it. It's also worthwhile if you have any employees that you may need to, I know we don't want to talk about redundancies, but it's worthwhile having that in place and looking at that sooner rather than later to make sure that both you and the employee is receiving the package that is most tax efficient for them as well. And lastly, for those people that are self-employed, there is a self-employed scheme which is very similar to the job retention scheme, and it's now there's an online checker tool that we can share the links for, which was just launched this week on Monday. So you just need to log on to HMRC, put in your unique tax reference number and your national insurance number, and then that will tell you whether you're eligible to make a claim. And if you are, it will also give you a date and time when you can make those claims. So that online claim tool will be going live on the 13th of May. And then you can make a claim and get a maximum of 2,500 or that 80% of your average self-employment earnings, and that's based over the last 3 years' tax returns. In addition, the government have also, usually if you're self-employed, you pay your tax on the 31st of July and the 31st of January. So they've also deferred those payments in July. So you will just need to pay your tax on the 31st of January 2021. And you'll not have any penalties or any interest in relation to that as well. And as with companies, it's maybe worthwhile possibly changing your year end if you have profits have reduced significantly, or if you've loss making, there's maybe some things you can do to decrease your upcoming tax bills as well, personally. So look, that was a very quick whiz round, the income tax and the various different taxes, and how we've seen different businesses implement different strategies to sort of help their cash flow. So what I would probably want to do is maybe just, if you have any questions, if anyone wants to, I think you can raise your hand, or else just enter the question into group chat. So probably, Geoff, first up, I know that someone has sent a private message here. Sort of what sort of interest rates and time frames are these loans that you're talking about? Will businesses need to pay?
Yeah, good question. So if we take the interest rate and pricing side first, so the bounce back loan scheme, which is the most recent one I talked about, launched on Monday for loans of 1,000 to 50,000. That has actually been launched by the government and is a 100% government-backed loan. So in effect, the banks and the lenders are secured by government guarantee on those loans under the bounce back scheme. So as part of that scheme, all banks and all lenders are providing the loans at 2.5% of a margin. It's also 12 months interest free and 12 months capital repayment holiday. So there's effectively no repayment due, either capital or interest, for the first 12 months. And then the interest thereafter is 2.5%. So that's the bounce back loan scheme, the small scheme. Then into the CBIL scheme, again, it's an interest only loan for 12 months. Any capital repayment holiday is at the discretion of the lender. So typically we're negotiating that and looking at that as the business requires on a case-by-case basis. Some businesses won't need a repayment holiday and will want to repay the loan as early as possible, and others we're providing up to a 12-month repayment holiday for. So it's really a case-by-case basis. And again, the margin on the CBIL scheme is negotiated by the lender on a case-by-case basis. The position that Dankse has taken and the commitment that we're making under the CBIL scheme is that any lending under the CBIL scheme will be priced at the same level as any existing loans that the business has. So we've made that commitment. And then in terms of timing, look, there are many cases where, and particularly with the bounce back loan scheme, which is the straightforward self-certification scheme, I'm aware of the first applications being processed online by customers on Monday, and facility letters being issued on Tuesday, and those loans will probably draw down and funds will be in accounts this week. Under the CBIL scheme, look, we I suppose at the outset prioritised those cases where the need was greatest. And I mean, there are examples of receiving information from customers and having credit approved facilities the day after, and drawdown of funds and money in customer account within 3 or 4 days. But I would say, as a general, under bounce back loans, it's really an automated next day process. And then in CBILs, as a general, you should be expecting some form of credit approved facility back from the bank within 3 to 4 days.
Perfect. That sounds really good. I think, as sort of Dorcas had mentioned earlier on, I think the government have been really good. There's plenty out there for businesses to sort of further help with their staff and also their cash flow, throughout these loans as well. So I'm just checking there. I don't see any other questions. Is anyone looking to raise their hand and ask something? Okay, so I don't really have many questions. I suppose just while maybe some people are looking at questions. So as I'd mentioned, this is the first of a series. So we have another 2 coming up in May. The next one is a career masterclass. with Sinead Sharkey-Steenson on the 22nd of May. And then also Gail, as you all know, the co-chair, will also be hosting the I Am Remarkable webinar on the 29th of May. So for tickets for that, they're available on leaninbelfast.com. I don't see any other questions coming through, but I would just love to, from Lean In, thank you so much, Dorcas and Geoff, for giving up your time and really good insights there for our members. Thank you so much.